Hi everyone, this is Ashish Kyal here. Welcome to the exclusive session that we are conducting for the people of for my mentees, for people who attended the Master of Waves program. I thought, what better way to do it than post the budget? We have seen all over the place. The markets were strongly bearish last week, turned the tide on a Monday, rallied sharply. Again today, the follow up has continued on the upside. So what better way of doing it? And I thought it's always good to get in touch with my mentees and with my participants of Master of Waves program. I can see Anju here, Kapil, uh, Nilesh, and all of those people. Okay, that's fantastic to get you guys. Chaitanya or Devashish, you are here as well. So it's great to get you, every one of you, together on this platform. I'm also thinking to possibly integrate the Gurukul platform which we have on Telegram and include the other mentees from the Feb batch, from the later on batch together and maybe brainstorm. Will that be a good idea? I think I should do that because that will help everyone to, each of the batch is doing fantastically well, and it's brilliant. In the current November batch, someone shared across Bajaj Finserv yesterday, and he bought Bajaj Finserv on the breakout and did fabulously well. Bank Nifty someone bought on Friday closing and did fantastically well. I'm so sorry, I don't remember the names, but I remember the trades that you people have taken. And Rakesh asked me for conducting the requesting for this specific webinar, and even Hardik asked me for doing it. So, in fact, coincidentally, from the three different mentorship batch, there was someone who asked for this program to happen, this webinar to take place, and that's why I said, let me just do it. And Master of Waves program, I was anyways keen on conducting some follow up on how to look at the wave theory, applying the Ichimoku, and looking at this kind of event driven movement. उसे कैसे देखना है, किस तरीके से देखना है, how to go about it. So it's always fantastic to do that. Kubar is here, Prashant is here, Rohit is here. These are all from the mentorship batch. I remember you guys very closely. Anshul is here, Arcadius is here. Okay, fantastic. This is like, I think everyone is here because of the markets, not because of what we do. I'm not sure, or maybe you are too keen on listening to what I think of the markets. Okay, but by now each one of you should have your own views, not because I am saying that you have to do it. uh, so Kenil, can you please forward it across to the other mentees who are not able to get the message so they can also join in? I'll just wait for a minute more so that everyone is there. I don't want anyone to miss on what I see on the markets, what's happening around, because market has shown a V-shaped turn after forming a very important high in the last week, going down very sharply and then reversing back on the budget day. As soon as the budget was concluded, we saw a spike of 200 points on the Nifty. Now that was very, very interesting. Okay, so we will be able to do something about it. Let us just see that. Uh, so I'm just waiting for a minute more for everyone to be here with me. I'll just connect the charts. So how is the trading going? I mean, how is the Josh? That's what I should ask, right? The markets are on fire. It's on a Viagra dose, so don't worry about it. We need to live with that, right? It, the dosage is just too heavy right now, and that's why it's going all the way on the upside, showing a very sharp recovery on the upside as of now. And Kenil says that the Josh is more than the ATR. I'm glad, Kenil. That should be the case. Whether you make money or you don't make money, the Josh should continue. Okay, that's the bottom line that we want to do in this mentorship program. How to become a wonderful trader, how to become a disciplined trader. Okay, very importantly. Okay, let me now very quickly start. For people who might not be joining in late, I'll try and share across the link. Kapil is saying the permutation combination of Viagra. Okay, okay. Let's just get back to the work that we want to do. First thing first. Now, when looking at the market, what happened yesterday, what happened today? First thing first. If you are by any chance short on the market, yesterday during the budget session, there was a classic exit opportunity which you would have exited if you have been from the mentorship batch, not necessarily from the Master of Waves batch. In the mentorship batch, I have told you very explicitly to use super trend and specific parameter I have given to you, which parameter you need to select if you want to exit and if you are short on the index or stocks. And that parameter got moved on the upside, and that should be the trigger factor where you should have been out of the market. Post that, okay, the market, there was some big bang announcement during the budget session. What was very interesting in the budget session was that during that session, when it was ongoing, when the recapitalization was announced for the banks, when there was a lot of infra focused budget which was laid down, the movement that we saw was not sufficient. The movement was simply not happening. It was looked like that there was someone sitting there hardcore ensuring the market does not move. Or maybe the big players were trying to accumulate the stocks the way it looks now. As soon as our FM concluded the budget, she said now the budget is concluded. As soon as she spoke those words, there was a spike. I'm not sure if you were tracking markets along with the budget very closely, but that's how it happened. It seems that this was the candle which we will name as Sitharaman Returns. Okay, the first one happened in September 2019, and the next one is now. So Sitharaman Returns, right? It's only she who can do this kind of market change. If she comes near the tops, the market goes down. If she comes near the lows, the market goes up. That's what she's a reversal candle. For me, that's what I'm looking at Sitharaman right now, with all due respect. Okay, no hard feelings. And what I'm seeing in the market is there is a huge move on the upside. Now, someone who understands the wave theory will understand there were two possible scenarios. So on Saturday mentorship batch morning, I talked about two possibilities as per the wave theory. One of the possibilities that we might have concluded a wave G on the upside, and we are starting maybe on the downside depending on how the budget goes and how the event folds out, right? So closing becomes important, which now looks like a very strong positive close happened. The other scenario suggested that this up move, the fall could have been only a wave F, and we can start a wave G of a diametric pattern. I will show you on the chart, so don't worry about it. So wave G of a diametric pattern is what we expected might start, which is now true, that wave G has started. With the start of this wave G, there has been stocks which has gone up like crazy, 14-15% yesterday, again 10% today. Tata Motors up by 15%. So there are opportunities lying from stock specific buying that can still be done now. Given the recent rise, what is happening is the fresh buying stimulus which has come in is also resulted into short squeeze for the people who have been short during the past week. So that short squeeze coupled with fresh buying, coupled with already going mania and the frenzy, the market went up sharply. Okay, that's what happened during the corporate tax cut, which was in September 2019. It was in September 2019. Post that, we saw a big candle on that same day. Next day, there was a gap up. The market resumed on the upside. And then we started seeing over the period of 5-6 days, some kind of a retracement before the up move again started. So these kind of up moves results into a drifting behavior after a few days of time. When I say drifting behavior on the upside is normally how it behaves. So in this kind of a market, you now have to understand the wave pattern. Now that we know that the wave pattern is G, now the key is to apply on a 15-minute chart. Okay, on a 15-minute chart, the Neowave practice that we want to do. Okay, let's just look at the chart right now. Just give me a second. I'm going to open up my chart here. And if you have any queries or doubt with respect to what we are trying to do as of now, You can always ask me. I'm going to be looking at this chart, and very specifically from the Neowave perspective, the way we have done it in the Master of Waves program, and the way we have done it in the mentorship program, and the way we are doing it in the current mentorship program. So that's how I'm going to be looking at this scenario. Let's lay the foundation again on looking at first thing first. So in each of this mentorship batch, as I've explained you, what you have to first look at it, what is the overall bias of the market by looking at the daily, the weekly, the monthly trend. Until Saturday, this was on the downside, but with the Monday, things changed. The weekly trend has again reversed back on the upside. That's one. The monthly trend where there was a rejection. So this is a big candle. Okay. There was a rejection from the top. Now there is an acceptance of that rejection. With the acceptance of that rejection, it indicates that the bulls are still in control now, and the bears are trying to run. Till this point, if the low of this candle, remember on Saturday in the morning program of mentorship, I told very specifically, the low of this monthly candle is concluded, and the start of Feb starts that next month candle. The low remained protected even when Nifty closed near that. तो लो वहां पर प्रोटेक्टेड रहा. उसका क्या मतलब है कि कैंडल स्टिक के बेसिस पे अगर देखा जाए तो मार्केट ने सेल सेटअप थर्ड कैंडल पे बनाना था. गाइस who understand the three candle setup that we keep doing, I'm going to conduct this webinar on candlestick with price action on this Saturday at 5 for people who want to join in. They can simply register on wavestrategy.com/webinar. My colleague will share across the link. You can register there for this specific how to observe the candle program. If you look at this candle, the low of this candle still did not break by the next candle which we found with the start of Feb, and it resulted into a huge buying, which means that the rejection which happened on a inverted hammer is bought back on a monthly basis. तो monthly basis पे कुछ भी change नहीं हुआ despite of having some seasonality effect in January. Now on a weekly basis, if we look at it, because of the current candle, on a weekly basis, we are now seeing the prior week's high being taken out in just 2 trading sessions, which means there is a huge buying which has come in. For the overall trend now to turn bearish, we need to see a break below 13,660 levels, which is 1,000 points away from it. It's too far away right now. Looking at the overall candle formation for now, it seems unlikely we might break that low in this week. That's how I'm looking at it right now. So I'm going right from the very scratch of how to look at things, right? हम वापस वही चीज कर रहे हैं from the very scratch. Now I'm going to apply on the daily chart. The same concept I'm going to apply on the daily chart. If I apply this concept on a daily chart, as of now, on that daily chart, we can clearly see the move on the upside bias is positive, as long as we do not see a close below the prior day's low. That's a very simple way of looking at the trend of the market, right? Overall bar technique, candlestick, that's how we look at the overall trend of the market. Is that thing clear? Okay, Kenil has a question here. Entire month is yet to go, it's just 2 days gone. So correct view for monthly candle to be by Feb end. Not really, Kenil. I'll tell you, for the monthly candle, did we, even if we, suppose if we don't take out the high, which is the high of 14,753, and we take out the low, if we don't take out the high and we take out the low, then your bias will turn negative. Okay, we'll discuss it in detail, much detail in the mentorship if you have any queries. But I'm just saying that, which may, otherwise it will form an outside candle which does not change anything. So February will not change the bias if it forms an outside candle, if, as you know. Okay, and people from Master of Technical Analysis program will also understand this concept. And on the weekly basis, again, there is a candle formation with an acceptance, which has happened. And the daily is positive for now. Now, once I have this view in place and once I understand what's happening overall for now what we have to do is we now have to look at the wave pattern. Okay. Let us just try and look at the wave pattern first. And what is it suggesting? What is the overall wave pattern suggesting? Master of waves people, can you tell me what is the easiest way of uh, plotting the wave count here? What is the easiest cheat code that I have given you to plot a wave count? Apply an Ichimoku, right? Kubar, fantastic. Bhanu, Shrikant, Kenil, super. I mean, you guys are simply fab. Preeti, great to see you as well here. Okay, so I'm going to go and apply an Ichimoku here. So these are some way in which we do the application of wave theory. I know Mr. Glenn Neely will be offended if I tell this to him, but as long as it helps me make money, it does not matter, right? Okay, okay. Let's just get back to work. From daily, I'm switching now to an hourly chart, right? So on an hourly chart, it has been a crazy move on the downside. This was a very sharp move below the Ichimoku cloud. I'm not looking at Ichimoku hourly as a signaling system. On Saturday, we discussed two aspects of it. One is the overall context and one is the signaling system. Okay. So we are right now deriving the context. From the context, we'll go to the signaling system later. So if I'm looking at this specific chart, and I'm not going into the wave counts prior to this low because we know what the wave counts is. I've explained each one of you many times. So I'm going directly from here into the wave pattern that we are seeing. यहाँ पर हमने mark किया था X. That's the wave pattern. From here, we have marked wave A here. Earlier count, I'm talking B here. C. So to above the cloud, below the cloud. Above the cloud, towards the cloud. Away from the cloud is E, below the cloud is F, and this could have been a G given the sharp fall that we saw. However, the confirmation of this should have been two-stage confirmation should have been below this low, 13,200. Why? Why 13,200? Because below 13,200 there would have been a what? Guys, tell me, the master of waves, we did that. The last rising segment is retraced back faster below that. The two-stage confirmation as per Neowaves happens only in half or 1/4 of the time below that. But the problem is waiting for that two-stage confirmation to initiate a position, you might be already too far away and too far away. So yes, we need to do that little early on to ensure that we don't wait for a 1500 point fall and then we say, okay, the top is formed. And so, but looking at this current candle, so right here yesterday, when there was a break above this high, I'll tell you why. That was the reversal basis of wave theory and how classic Neowave helps us to understand that. I'll tell you very clearly, despite of the event. So if we go on a 15-minute chart, I'm now right now going to go on a 15-minute chart, and we discussed about the scenario of the wave diametric pattern. Okay, now since we saw this leg took lesser time, so this was wave A, this was wave B. Since B took lesser time, we expected a diametric pattern to form, and this was C and D, which I talked about. This was wave E and this was wave F here, and wave G concluded at this low. Okay, so somewhere around this zone, this is the zone of conclusion, because from there we started seeing a faster move on the upside. Now the moment this high was taken out, which was the high around this zone, which was 13,880 level. This is the level I talked about in my interview on Founder India as well yesterday during the budget session just started. I mentioned 13,880 as an important level. The reason of 13,880 as an important level is because that is where wave G started. And if we see a faster retracement above that, it indicates that this down move is concluded. Once I have an indication that this down move is concluded, I now know that maybe the first leg, a bigger A, is concluded, or maybe this entire fall was only wave F. Something got over and the up move should start. Are you with me, every one of you? Are you understanding what we are trying to do? Exactly what we did in the Master of Waves program. I'm just trying to again repeat that concept very strongly with the current market scenario. The moment you got a conclusion that something got over here, you now have to jump from your bearish view and change your stand either to neutral or bullish. Okay, once you change your stand to neutral or bullish, then you come back to the candlestick chart on an hourly time frame. So now, since we know this wave pattern, this was the entire wave pattern that we saw at this point of time. Okay, once we know this wave pattern and it's complete, and this is the scenario we discussed on Saturday itself in the mentorship batch, we discussed about this possibility. So once we have this possibility in place, there is no reason to be surprised. Let's then jump on to an hourly chart. So we are jumping from one time frame to other, keeping the wave theory in mind, keeping the overall bias in mind, and trying to see what's happening around in this zone. In this entire down move, it is hardly once or twice we saw a close above the prior hourly candle high. However, this was the candle where we saw consecutive positive closes, a rejection from this candle on the downside, and then this high, which was 905, I distinctly remember 906, 13,906 was the level. As soon as there was an acceptance above 13,906 level, that was the time. If you follow candlestick very closely, where is the rejection? Like a market profile, we are creating profile out of candlesticks here. A rejection, an acceptance, and this low was protected, and G is concluded here, which took 1, 2, 3 candles, and it took out in 2 candles, which means this leg was over, and at least nothing but, if not a fresh up, at least a retracement of this entire down move has started. So once you know the retracement of this entire down move has started, a diametric normally has a retracement of how much? 61.8%, right? We discussed that. At least around that zone. So we expected, so candle fantastic, 61.8 to 80% is what we discussed. At that point itself, you then put your, where is the retracement gone? Yeah, you then start putting your retracement on the chart, that we then expect markets to retrace towards this zone of 61.8 to 80% that we do. You know, the closing yesterday is exact to the point of 61.8%. Can you beat that? Is that coincidence? Absolutely not. And mind you, I'm taking a closing FIBO from this level to this level. And the exact reason I'm doing that is what you know, right? Faster retracement and all of those things. Once you do that, you see a classic conclusion which happened in yesterday. So candlestick with wave theory is purely what we are doing right now. Ichimoku, we know on an hourly time frame is too late. You can't really rely on an hourly time frame because it is too late, and we have seen that in the past. 15 minutes is where you can jump in. So once we have to conclude, so 0 is here. So 0 point is here now. So once we have this rejection, once we have a faster retracement of this candle, a rejection, then an acceptance, classic level, right? Similarly, once we have a rejection candle here on an hourly, then an acceptance back above this high will indicate the trend is resuming. That's how we need to look at candlestick rejection and acceptance. I'll discuss more on candlestick if you want. You can join me on a Saturday at 5. It's a free, Saturday at 5 is a free webinar. Tarun, I'm not sure if you are from the waves program. Are you? If you are, then you will know that why we are selecting a low here and not the low of the red candle, because of the faster retracement concept, right? We need to go on a smaller time frame and check where is the conclusion happening. I can't conclude the wave at the low here. Okay, let's just move on now. So once I have this clarity on an hourly chart and acceptance, now let us again jump on a 15-minute chart. I'm again jumping back on a 15-minute chart, and look at this. This is brilliant. Prices went towards the cloud, came down, started finding support near the cloud. Can you see that? I'm more concerned about the body, not the shadows right now. Because there was a shadow, but the body came back and supported in the cloud, and then a big bang out of that. So even if you would have been using this concept very clearly, you could have easily able to make out what we are trying to do as of now. Okay. I think there are people who wants to join on the Zoom right now. Let me just share an invite to them for few who understands this thing. I'm just sending, but to be very honest, I'm taking questions only from my mentees or from the Master of Waves program participants. I'm not taking questions from the others. This is meant for them to understand. Arun, great to see you on YouTube. Okay, I can see Arun there on the YouTube. Arun is also a very fantastic being. Okay, great. So let's go back to work. Just 1 second. Okay, just give me a moment. So once I see this, are you able to see my ME broker screen? Once I see this and I see an acceptance about this, it's like a classic indication that something has changed and the overall move has happened on the upside. So now let us try and do a we are doing a post-mortem right now of what has happened. But wave theory is more than the post-mortem. We now have to see what can happen. Okay, because that's the way of forecasting the market. So we want to see that. And if you look at this entire move, as I said, we completed an X at the bottom. We completed an X at the bottom. We had an A here, a B here. The C looks to be over at this point of time. This looks to be a D. This looks to be completing an E at this point and an F here. And we are in G. Now what we have now we know that we might be in G. G tends to mimic with A, which it looks like it's already doing. So this is what we expect wave G to do. This is what we expect wave G to do, which we are right now seeing on the charts as well. Are you with me? So this is what we are expecting, and this is how wave G is behaving, which is similar to wave A. And this is where we are. So this entire pattern has now turned out into a classic bigger diametric. Earlier it was looking like a smaller one, but this looks like a classic bigger diametric pattern. Okay, now this is how it looks like. And post the G completion, we will see how prices behave. So see, remember on Saturday we talked about it. It's divided into two parts, right? Context, your trade setups into and signals. Right now we are in this zone. For signals, we will discuss that in the mentorship again. Okay, how to get those signals, exact entry, exact exit, that we will discuss. So right now we are deriving this context again. Are you with me, guys? Are you understanding what we are trying to do here? People from the mentorship batch and also from the Master of Waves program. So is this thing interesting? How wave theory is helping us in terms of having both the scenarios ready. That's why I said on a Saturday during the session, always have both scenarios ready. See, markets wants to surprise you, but once you are ready with both of the outcomes, you know how it's going to behave. So if you know how it's going to behave, you know how to act. Okay, you will not react, you will act on the market. That is very important. Okay, that's very, very crucial for you to understand. So when G tends towards equality with A, we know that 14,840 around zone is the level we are looking at. But remember, the bias should change. G, this is just a guideline. Okay, it's not a rule. When we are doing a diametric pattern, it's a guideline, and so there are no rules in diametric. So that's why we need to understand it as a guideline. This is what we are expecting, that the overall trend is still bullish, but short-term move on or correction is not ruled out, or consolidation is not ruled out. How do we know consolidation? Then you can go on an RSI, apply an RSI, check if we are in above that 75 or 80 mark. If yes, then some pullback is expected. Apply candlestick. Look at this candle. This is a big candle. We are with the rejection at the highs. Do we get an acceptance about it? If we start getting accepted above this candle, then start going on a 15-minute chart and start applying your wave principle again. So once you have the context, back to wave principle. So keep doing that, and that's very important, right? Then jump on a 15 chart and apply and try and see what's happening around here. In fact, if you look at this chart, this was like a classic inverted HNS also. A shoulder, a head, a shoulder here. Master of Technical Analysis, we discussed this very clearly. A classic. The challenge, I'll tell you, is what? The challenge is the reaction time. Okay, the challenge is the reaction time that you see on this chart. So that is where the trick comes. So if the reaction time is less, that's when you are going to be, you need to be very fast in assimilating the new price data coming in, and you need to be very quick in doing that. Okay, in anticipating, changing your view, changing your stand, changing your bias, you need to be very quick in able to do that. With wave theory, you can do that with a blink of an eye, but for that you need to have some mastery over it. Okay, so that will happen slowly and steadily. I can see a lot of you people are posting across charts on, especially Rishi and others are posting it on the traders forum on wavestrategy.com. Keep doing that. Keep sharing it across. Keep posting your doubts and queries. And that's very, very important. Okay. Given the event, it could have been tricky, but if you minus the event and still only look at the chart, this still looks like a very classic move, and the way it behaved. Look at the resistance it took from the cloud. So the movement during the budget session by around 12 came towards the upper end of the cloud, got rejected from there, got accepted again above the cloud by the time the budget got over. So everything still worked out the way exactly it should have worked out. Even when the markets were going on, exactly the way it should have happened, it happened. So the event, yes, but still prices behaved brilliantly the way it should have. So what I'm trying to suggest is that despite of these things, do not get carried away with the event. You need to ensure, because of the event, you need to have a stop loss in place much better than you could have any other day. That is very crucial. The stop loss was far away, you knew that, but still, if it's far away, position sizing plays a vital role. So we have developed these Excels where we have talked about how to position size, how to reduce, how to do this, how to do that, all of those things. Okay, so stick with the Excel, stick with the rules, stick with the plans, stick with the strategies, stick with everything. So that's what we are doing, right? Aditya has a doubt, little doubt, that X wave didn't took 1/3 time of the previous pattern. Anything we can manage in marking? X should not take 1/3 of the previous pattern, right? You're getting confused with degree and pattern. So X will be of a same degree if it is 1/3 in terms of time and or price, so both should be followed. So that is very crucial. Okay, so keep that in mind. Fair enough. Fantastic. So I'll just take a few questions and the rest we will discuss in the mentorship batch. So I can see there are others also here who are a part of the program. Just one second. Where is the screen gone? Yeah. So I can clearly see there are others also who are a part of this program which is going on right now. And if you want to be a part of the mentorship batch in March, you can simply participate here. We discuss all of those things. And in the meanwhile, I'll keep answering the questions that you have. Rakesh is asking about ICICI Bank. Rakesh, I can't really discuss specific stocks right now. I thought I'll be more keen on discussing about how the wave theory looks like, what's happening around, and things like that. So people who are there on the YouTube, for them, what I can do is simply share across a form. You can simply fill up this form, and if you are interested for the mentorship program, which is in March, and it's the early bird ends on Feb, so you need to 10th of Feb. So you need to ensure if you want to be a part of that program, you need to be very sure on registering before 10th of Feb program. Okay, so here is the link which I have shared across. So ensure that you are a part of this. It's a fantastic journey, right? And right now I can clearly see so many people from. So I think Rakesh asked me from from which batch? June batch. For that, Hardik asked me. A couple of others from even from I think Nilesh asked me from the Fab batch. Why not we have a session on how to look at the wave theory? And I thought, yeah, let's do that. It's fantastic to be always in touch with each one of you very clearly. And Rakesh, I'm so sorry you are from the Fab batch. Okay, yeah. So, it's always fantastic to get you guys back onto the track for any kind of a queries or anything that you might have. So it's fantastic. I'm just taking a Q&As if there is anything. Indrajit is asking, can you please share super trend parameters again to select for a buy and a short? Indrajit, let me share it on my Telegram group. Okay, the mentorship Telegram group which we have, so we will share it there. Or if you can post it across there, then I think the other Gurukul members will be able to help you out. So don't worry, you can just simply post it there and I'll respond to you on that, because I don't want those important parameters to be given out on a free forum. Okay, so this is Kenil is saying this is a third standard correction. So anyhow, it should be the final stage of entire B wave. Yes, Kenil. So this is the third standard correction. So let's just see how it spans out. So next 2 days is still there are certain smaller cycles forming a low. So we might start seeing some drifting behavior. So I'm not catching a top now. Okay, I'm utilizing drift on the downside to buy the market. What should I buy? Stock selection algos which we have developed. You start using that. The buying algos which is there. So start using that, which we have developed. Remember. So start doing that, and you will be able to understand very, very clearly. Okay, are you with me? Fantastic. Great. So I'm just ending the poll for anyone. In mentorship, algos will also be discussed. Omkar is asking. Yes, we are discussing algos on how to form one. So we are forming certain algos. So that's also we are doing. So I'm going to end the poll on the mentorship program here, and just give me 1 second. Fantastic, guys. So I think this will clarify people who are from the Master of Waves program, from the mentorship, who are eager on knowing what's happening with the market. So far we understood, okay, this is G wave. We know the context now. For the signal, start applying Ichimoku, super trend, combine that, apply cycles, combine that on a 15-minute chart, apply time cycles, and do a wave count on a 15-minute chart, post it across on our Telegram group. I'll discuss with you. I'll discuss there in much more details. So we can do that on the Telegram group that we have. So I'll keep bothering you people, asking you to join me for sudden webinars like this one, so that you people are back on track, know the way the market should be looked at, and I will be more than happy to answer any one of your queries, doubts. Does not matter if you have done the mentorship way back a year back, does not matter to me. You remain with me as long as the market remains, right? So that's what we want to ensure. It's not just a one-time thing. So people from the existing batch, don't worry, we have only 2 class left. But people who want to join the March batch, here this is how we go about each and everything in the mentorship. Very disciplined way, very systematic fashion. We look at things, we analyze, we brainstorm. We do not debate, we brainstorm and we look at it, how to go about it, how to look at it, how to get that confidence back, how to reduce the anxiety, how to ensure the risk reward is favorable. So apply all of those things together. It's very very important, right? Sandeep is saying you're a great guru, sir. Thank you, Sandeep. It's all pleasure. I really love you people, so I keep doing it for you, and I can do it again and again and number of times. It's because of my time constraint. I can't take frequent sessions, but I love to do that for you for any point of time. Okay, fantastic, guys. And do recommend for Mentorship March 2021. If you have references, please pass it on across to us. And if you have any queries or doubts, keep posting it across. You can always follow me on the Twitter at the Kyal Ashish. That's the fastest way of getting answers, or post it on the traders forum. Okay, Tirumala is saying, honestly, your voice gives energy. Fantastic. So maybe you join this program for more energy, not necessarily for trading. Who knows? Once your energy starts going upward, you might start becoming a better trader, irrespective of what you learn. Okay, Omkar says it's there. Chaitanya, true, sir. Your very presence inspires us. Thank you very much. Even Indrajit is saying very inspiring. It's a pleasure, guys, to have you people as the few with whom I started my mentorship a year ago, and it's fantastic the way I'm seeing the transformation in each one of you have done fabulously. And in the current batch, so much of enthusiasm, so much of energy, so much of discussion, and absolutely no debate is what we want to create this Gurukul, where we want each one of you to become a wonderful trader. Thank you very much. Have a wonderful time and see you on Saturday for the mentorship batch, on a Friday at 4 webinar. And on Saturday, I'm conducting a free candlestick program at 5. For registrations of these things, you can simply visit wavestrategy.com/webinar and simply fill out your details. This is Ashish Kyal signing off, and do not get anxious with the market. Just know what it's going to do. Once you know how it's going to behave, keep that scenario ready of 200 down or 200 up, how you are going to act, not react, and you will have your answers. Thank you very much.